Of course.
All right, so
Okay.
it's on record now. I'll send the link to you when we're done. So it's for your personal use, not for you to begin to repost.
Okay. Thank you.
All right. So forex trading, forex trading has to do with buying and selling of currencies online. The same way you do your money exchange between the Aboki man, which what do you call the black markets, where you go to them and you give them your dollar, they change, they give you naira, or you give them naira, then they give you dollar. That's the same thing we do. It's nothing far from that. It's just that here we do it online. So you're just simply using one money to buy another and make profit from the difference between both of them, over a period of time. So let's say, for example, the dollar at this moment, 2015, is 480 to 480 naira to a dollar. And then by 10 p.m., the price changes to 490. So if you had bought when it was 480 by this time, 8:15, and then by 10 o'clock, which is just less than 2 hours later, when it gets to 490, it means there's a difference of 10 naira. So if you had bought at 480 and then you close your trade by 10 p.m. when it's now showing 490, it means there's been a difference of 10 naira in between that time period. That difference in amount is what we make as our profits. Now, the amount of profits we all make as individuals will now be that difference in price times the lot size you are using to trade. That gives you your amount profit in your value in cash profits. So that will take us to some. Please try to mute your mic. I said if you come in, mute your mic. You only unmute when you want to ask a question so that you don't interrupt us from external noise outside. So now, when you make that difference, the difference between you entering the market and you leaving the market times the volume with which you are trading that particular currency or pair gives you your cash profits. So two different persons can trade the same currencies at the same time and make the market at the same time, but they will make different amounts of profits because the volume person A may use may be different from the volume person B will use. So that brings us to what I want to introduce to us, and it's called forex terminologies. Now, if you're trading forex, you must understand some of these terms. The basic ones I will talk about now, and others you will get to hear them in the group chats when we talk. This is like a crash training, so I will need you to try as much as possible to follow up, and get up to speed on time. I know I'm going to be talking about things I should teach you over a period of like 3 weeks. But I want to believe that if I give the introduction and then you all are in the group, with time on daily basis, you begin to catch up and follow up what is going on. Don't mind me, I'm on my trade as well. So from time to time, I may be distracted and just do one or two things and then come back to you. So now, like I was saying, by the time we touch the basics now, over the period of time when you are in the group, you get used to some of these things and then they will become new to you. So when I speak of these things, don't get scared or don't get worried. With time, you get used to it. Now, Emmanuel, this is because of you, because every person here knows these terms. We'll talk about lot size. Lot size has to do with volumes. Like if I want to buy water, can of water, and I go to a superstore, they'll definitely ask me how many cartons I want to buy. If you go there, you also buy in cartons. So if you are buying one carton, you tell them one carton as well. But if someone else wants to buy and then is saying he wants to buy 2 cartons, Then of course, the total price of what is buying is going to be the amount times the 2 cartons. In Forex, what that volume, in Forex, we refer to that volume as lot size. So when you say lot size, it depends, it's talking about the volume of what you want to buy. Now, when I'm taking a trade, one important thing I must consider before taking any trade is that lot size, because if your account balance is not sufficient, then you will not be able to buy more than the required amount of trade that you want to go into. Just the same way you want to go and buy your goods in your store. If you go with an amount of money and then you get the price of the goods, if you decide to buy more, that will be totally dependent on how much you have in your account. So the same way here, when you're trading the Forex market, you see that the market is good. You are very confident of the trend the market is going to go. You cannot just begin to throw in all the volume and say, okay, I want to go with 50 lots or 40 lots or 10 lots. The volume you can go in with depends on how much balance you have in your Forex account. So when we talk about lot size, just understand that it has to do with volumes of how much you are able to take on the trade. Now, the next thing we'll talk about is spread. Spread has to do with what the brokers make as their profits. Now, in Forex, there is always a middleman. Because we do not have direct access to the market, we work through what we call Forex brokers. Before now, people can only trade Forex through the banks and big financial firms. But early in the 90s, Forex became very, very, open to end users like us who connect through middlemen called Forex brokers. Now, there are several Forex brokers, both in Nigeria and outside Nigeria, that you can trade with. But now you are working, those of you do not have the personal account yet anyway. Those of you already have, you already know what the broker means. Now, we are going to be trading props account, which means companies who have Forex accounts opened with Forex brokers, of course. So now these brokers, they are the ones that will determine the spread of the instrument you are trading. Like I said, the spread has to do with the commission that they want to charge you for every trade you take. And there are different sizes. So let's assume you are buying, you are trading GBP USD. The GBP is Great Britain pound, and then USD is United States dollar, of course. So if you are trading those two pairs, for example, the amount you will be seeing on your chart is slightly different from, what is actually supposed to be the real price at that point in time. But that slight difference, you'll be seeing the two prices, the bid and the ask price. Those difference are the spread, and that is what the broker gains from taking such trades. So sometimes when you want to take a trade and you see that the spread is too big, you may want to leave it. Some brokers charge very high on their spread, and some they try to reduce the spread and get their profit from other means and all that. So, but we'll not be going into all of that because it's just one person here who is not into Forex. So I will not want to delay the class for those details. I will dive into other things. With time, he will get to understand and then follow up. So we've talked about lot size, we've talked about spread. I need to understand these things because these are the things that you'll be considering very seriously when we're trading prop account, because these are the areas that determines, the kind of trades you take on prop account. A lot of persons blow out their real account, or they make very bad trades because they do not know how to manage these lot sizes and do not know how to manage the trades they go for. So I really need to understand what the lot size means. Now, aside that, the lot size, the spread, every other thing is basic, normal buy and sell. So when you get on the app, you see those things later on. I think I may have to send you some personal notes on those terminologies and how to use the app. So I want to go quickly into the main reason why we are here. And that has to do with the signals on how to trade the prop account. And then I will introduce you guys to the props account you should work with. There are several of them. There are lots of prop accounts these days. I never knew about it until a few months back. So that's why I'm trying to introduce to you guys now. So those of you who have traded with your personal funds for a very long time, they have the opportunity of getting some of these accounts and trade with them. Is far easier for you and far cheaper instead of risking your personal money. But then you also need to know how to go about their restrictions, because there's a whole lot of restrictions placed on these accounts, because they are life accounts, and then they cannot allow you to risk their money for nothing. So I don't want to make you understand that the forex charts you'll be getting when we leave here, by the time we're done with this training is going to be for today and tomorrow, and then Friday. Then those of you who need extra classes to understand some of these terms, like Emmanuel, I'll be taking you special classes on Saturday and Sundays, and then we'll be done. But then every one of you will be in the Signal group. So what we'll be doing in the Signal group basically is to share the signals that we'll be using to trade the prop accounts. Of course, if you have a personal account, you can trade them with those signals as well. But I'll teach you how to go about it and how to be using it so that it will not affect the restrictions placed on that prop account. Now, for me, basically what I do when I trade Forex, I open my, are you guys seeing my screen? Okay.
No, we can't see your screen.
No.
Okay, I'm coming. Okay, can you see it now?
Yes.
Okay.
Yes, sir.
All right, fine. So now, what I do as a trader, when I want to trade the Forex market, what I do, I pick out the instrument I want to trade. Instrument means any pair at all. We have currency instrument, we have commodities, we have futures, we have cryptos and all that. Some people call it assets. So when I say instrument, you should know I am talking about any particular pair, either currency pair or commodity type and all that. So I can say the gold instrument, the silver, even oil, you can trade all of that. Yeah. Now I can say the GBP USD, Great Britain Pound per USD. I can say Euro USD. They are all called instruments. So now, when I want to trade any instrument on my platform, I try to break it down to, when I open my workspace is like your drawing board where you put your pair into check. You try to analyze where you think the market is going to be heading in the nearest future, because that's what the market is all about. Forex is all about predicting what will happen in the nearest future as regards that particular asset that you are trading. So your workspace is what you can see on my screen right now. This is an example of my workspace. Is the trading app, the trading charts, where you analyze instrument and then you take your trade. Now, for me, what I do, I try to view the market, in long terms and in short terms, and then I take my entries. The first thing I do is to split my chart into four different. The first thing I do is to split my chart into four different. I don't like. That's why I'm trying to share these things. Please, I'm coming. Let me just tell this guy. I sent you a link to a group. Join the group and you see the link to the Zoom meeting. Enter. So now, what I do first is to split my chart into four different groups, and the groups are called time frames. Time frame simply means the period of time you want to view your assets. You know, like if I open my charts, a particular asset, and I put it on a 1 hour time frame, it simply means I want to understand the activities around that particular pair, you know, in multiples of hours. Okay. Now, if I put it under 4 hours, it means I want to view the activities in every 4 hours. If I put it under 1 week, the same thing. So what I do, and the bigger the time, of course, the more information you get from that chart. So when I put it on, what I do, I split my chart into 4 different groups, and I have the first one is will be under the weekly time frame. The second one will be under the daily time frame. Excuse me. The third one will be under the 4 hour time frame, and then the fourth one will be under the 1 hour time frame. Follow up very seriously on this point, because this is where you have your own work to do. Forex is a very dicey business, and sometimes you need to know how to do the right thing at the right time. Knowing how to do the right thing is not just enough. You must do it at the right time, or else you miss out. That's what we do with time. That is why when you're a forex trader, you do not joke with time. If I give you an analysis now and say enter, and you wait for 2 hours, and then you are going to take that same trade, you'll be on your own. It might be it's when I'm leaving the market that you are going in. And if you make losses, it will not be my fault. It's your own fault. The market works with time. That is the reason why when you look at the chart, it's always plotted price against time. So it doesn't wait for you. The moment you see the opportunity, you jump on it. If you don't jump on it at that time and the market changes, then it's a different ballgame entirely. So you must know how to take advantage of the time. You may have other things doing, fine. But then if you must do forex as a side also, then you must be ready for it. It's not a joking business. It's a very serious deal. So if you're not capable for it, it's better you back out. But if you are in for it, then of course I'll be here to assist you as long as you're ready to follow. Now, I was talking about the chart. I'll have 4 parts of my chart. The weekly time frame is what I use to check a long-term direction of the market. That means I want to get a holistic view of where I think the market will be going in a very long time. And that is what my weekly time frame does for me. So that when I'm trading, I want to trade in line with that direction. Some people trade every morning. They trade just a manner of ways. Whatever they see, they just go in and then they trade for that time and then go out. I don't trade that way. I like to trade, you know, in accordance with the trend of that particular asset I'm trading. So if you want to beat this prop firm, you must work in this direction so that you don't accumulate a lot of drawdown. You try to avoid drawdowns. We'll get into the issue of drawdown when I want to explain those restrictions to you. You understand what drawdowns means and how you can avoid those things. But just follow up. Now, weekly time frame, I use that to analyze my market direction for that pair. And I can decide to say, okay, because of what I see on the weekly time frame, for this week, I want to keep buying this pair. I do not just buy today and sell tomorrow, or buy now and sell later. No, it means that if I am getting direction for this pair, all through that week, or even sometimes all through that month, I may end up just buying that pair. So what I do basically is to buy. When it gets to a point, I close out and take my profits. I wait again. When something we call retracement occurs, then I go in again and buy. When it gets to a point, I take out my profits. I wait again for it to come back. I buy more. That is how it works. So I use my weekly time frame to analyze my trend, to know my direction. My daily time frame, of course, will expatiate more on my direction. It means that whatever I'm not seeing clearly on the weekly time frame, my daily time frame can give that to me. Sometimes you need that so that you be able to, get more information on what you are seeing from your weekly time frame. Then I use my 4-hour time frame to know if price is on the high price or if it's on the low price. And in forex, there's something we always say: it is best to always try to buy low and sell high so that you can, make more than enough for yourself from the market. If you buy high, you will be placing a very wrong trade. And if you sell low, you'll be taking a very wrong step. You must learn how to buy low and sell high. It means that if on a scale of 1 to 10, if I want to buy, I should try to buy when the market is just leaving from 1, and then I try to buy to 10. If you jump in at 5 or buy at 6, of course, you just have 3 left to get to 10. Someone who bought from 1 has already accumulated enough. In fact, if the person closed out from where you are buying from, the person also makes more money than you. That is the essence of getting into the market at the right time. So if I do my analysis, which is going to be my job for you guys, I do my analysis, I check the market trend and tell you where it is going. What I'll be placing most times on the group is the market trend. Now, if I have the time, I pray I do, I'll be posting each of my entries to you. As I want to go into the market, I'll just post on the group, and then you can see that I'm taking new entries. But then I may not be doing that all the time, because like I said, markets have to do with timing. Sometimes the trades can be so fast that I wouldn't even have enough time to do that kind of post. So what I expect you to do is, you already know the direction of the market for that particular pair. So as you get used to taking trades, you also get used to formulating your own entry points. Or by the time you already know how the market is going to move for that week, all you need to do is to look for the next entry point to go into the market. Let's assume I post and tell you gold is going to be bullish for a period of time. For as long as I have not altered that by telling you I'm no longer, seeing gold on that direction, it means that your job every single day is to come into the market and you wait to see if gold has retraced. Retracement means if a trend is supposed to be going bullish, bullish means buy. For those of you who are new, Emmanuel, bullish means buy, bearish means sell. So if I tell you gold is going to be bullish for a period of time, it means that we are bullish buyers. All of us in the group, we are all bullish buyers. So what we're looking for is, we're looking for retracement, which means gold needs to come down a bit, which is to sell a bit. When it sells and comes low, you are supposed to buy from that point. So when it buys and goes up, so it will get to a point, you sell, you close your trade and you wait for another retracement. The Forex market moves in waves. It cannot just move straight up from 0 to 100. It goes to like 0 to 30. 30, it comes down to 15. 15 can go back to 25. 25 comes down to 20. 20 goes up to 50. 50 comes down again to 10. So when it goes like that, you must know how to take advantage of this movement, the wave movement. You must know how to close when it gets to a point, and you wait for it to retrace back, and then you take your entry again. Some people, they trade both ways, and that's what we call the swing trade. Some people, they know how to swing the market. When it goes up, they buy they sell from there. When it comes down, they buy again from there. But you, as beginners or as intermediate traders, you may not know how to do that. So I will not advise that yet. We'll start with following the trend of each pair. And that's the reason why I'll be supplying the group with a lot of pairs with directions. So what you do is, if I post like 5 different charts and tell you they are all going bullish, for example, they may not move at the same time. Okay. Now, gold you may enter gold and you see your gold is buying. When gold buy to a point and you are closing out from gold, that may be the point another currency pair has done its own retracement and then is trying to now start his own buy. So when you're closing from one, you are entering another one. There's always something for you to trade per time. So you must not trade all the whole 5 pairs at once, even though you are seeing them. I posted them on the chat just for you to know that, okay, this one is cooking. Just like you in your house, even though you have a lot of stock in your kitchen, doesn't mean you go and cook rice and beans and be eating everything. When you're eating your bread in the morning, you know that you are getting beans ready for lunch and maybe garri in the night. You already get those things prepared. So while you are taking one, you are planning what to take next when you are leaving this one. That is how it works. If I post 5 different charts for you, I'm not telling you to go into the market immediately. I'm just telling you, observe these trades, observe this market. This is what it's going to do. We are going to be buying them or we're going to be selling them. But you may not get the entry price at the time I'm posting it to you. I'm only posting directions to you. So I expect you to put in your only 2 efforts to say, okay, this trend is this, but we need to wait for this guy to pull down to this level before I enter. So this one is kept here. We'll put an alarm here and say, okay, if this guy gets to this point, I'm going to enter this trade. But while I'm waiting for this guy, this one has already hit his entry target. So let me start entering, and you take that one and then you're watching that one. What I'm trying to explain in practical terms is this. Now I have these 4 different charts here. Let me open this and expand it. This is a weekly time frame for Euro JPY. Euro JPY stands for European Japanese yen. Now, if I see a chart like this and I said, okay, I want to trade this pair, this is showing me that this pair is going to be bullish now because we are done with the bearish. We have been trading this pair. This is a weekly chart. So each candle you see here represents 1 week. Okay. Now this is the week. This current candle here, my cursor is pointing to is the current week from Monday to this point. Now, for you to see 5 bearish candles, it means that we have been having a bearish move for the past 5 weeks on this pair. That means if we are trading this pair, all you'd have been doing on this pair is to be selling this pair all through these 5 weeks, which is more than a month. Now, as you can see, this was what I set up weeks back. I posted this analysis for other groups I belong to, the FX Elites, of course. I also have you guys there, but that's for a general group. Everybody there shares information. You don't go there and ask questions. Where you ask your normal newbie question is our own, what's it called? Training group, where you got this link from. The FX Elite is a group where people post their trades. You don't go there and be asking people what is pips and what is lot size. You don't do that there. You go there and just see someone's trade. If you think the trade is right, you go ahead and take it. If you want to share your own trade there that you feel is good, you share it there. Now, when you see a chart like this, and then I post when I post something like this, it simply means that, okay, I want to start buying this thing. Now, mind you, when I posted this or when I did this analysis, all of these candles were not there. That means, let me mark it out so that you understand that Forex has to do with forecasting and trying to picture what you haven't seen. Now, when I posted this, all of these other candles here were not from here, 1, 2, 3, 4, they have not formed at that time. So I forecasted this. All of these guys were not present. I only saw this, and because of what I thought would happen, there's what we call breaking and backtesting. The market broke through this bearish trend line, and I felt there should be some, backtesting, which means that after breaking a trend line like that, the market needs to come down to backtest it and then move up again. So that was why 5 weeks ago, I decided that the Euro JPY pair is going to be bearish for me because I expected something like this to happen. Since market broke through this trend line, I expected a back test, and then from here, market can decide to go up again, which is also having its own clause. Market can also break through this trend line and have something like this, break through, back test it here, and then go bearish. But because it is on this side of the chart, for now, we call it bullish because anything above this trend line this way is bullish. Anything below here is bearish. So since it is backtesting this trend line, from here, I will be looking at buying. So I will say that on a weekly time frame or on a long term, I am bullish bias, which means that I want to be looking at selling, I want to be looking at buying Euro JPY, in the next few days or weeks to come. So after doing this, I cannot just begin to buy from here and just begin to buy and buy forever. No, I also need to, go over to lower time frames and see what is happening there. Now, the lower time frames, of course, we start with the daily time frame, from the weekly to the daily time frame. The weekly time frame will give me more information that I'm looking for. So I will check it out and see if there's anything that needs more careful touch, or something I need to look out for. The daily time frame will give that to me. If there is none, then of course I will leave it. So, and then start my